The payment of expense. I think Portia was making a submission as to whether this expense will increase capital or decrease capital. So Portia, go ahead.
Sir, please, what did you say?
So what answer were you going to give?
Okay, so I wanted to say that since you said that if there is payment of expense to affect the capital,
Yeah,
so there will be decrease in capital by
exactly.
the expense amount, and
Exactly.
there will be decrease in assets
Okay.
by
So
expense.
exactly. So professors, as you realize, the business is making payment, right? And you can make payment with cash or a check, which is bank related. So as you pay, your money is reducing, and money is an asset. Cash or bank is an asset. So there will be a decrease in asset, as we all should appreciate. So there's a decrease in asset, cash or bank. Okay. And the corresponding effect will be a decrease in capital. Because as I told you, expenses and income affect capital. So anytime you have a transaction that has expense or income, then the effect goes to capital. As we saw, expenses decrease capital and income increase capital. Now, this is because expenses and income would help you know your profit or loss. Okay. And profit or loss are adjusted to capital. So if expenses will decrease your profit, then it will decrease your capital as well. So let's get that in perspective. Okay, Josephine, you have a question. Go ahead.
Yeah, please, in writing the answers, does it have to follow a specific distance? Like, is it by force to write the capital at the second point?
Oh, okay, so if I get you, you can switch between them. You can decide to bring decrease in capital first or otherwise. It doesn't really matter. Okay,
Okay, sir, thank you.
good. So all the ones we've done previously, here decrease in liability, decrease in, you could have started with decrease in asset before the decrease in liability. It doesn't really matter. Great. So that's the seventh transaction. Let's go to the eighth. I'll be glad if we can finish the 10 and maybe begin to look at examples of transaction, and then you'll be giving me this. So the eighth is receipts of income. Okay, when the business is this time receiving income, right? So if the business is receiving something, that something can come in the form of cash or bank. So the first effect will be increase in asset, cash, or bank. And the corresponding will be increase in capital, and that is income, right? So the income is going to increase the capital as I've indicated to you. Okay, so I think the income is the opposite of expense, right? And if you see, as we learn, you begin to draw some summaries to assist you understand them perfectly. So if you look at the expense, it leads to both decrease in asset, decrease in capital, while income, on the other hand, leads to increase in asset, increase in capital. So you can be drawing some of these summaries to help you get the concept easily. The ninth transaction I want to look at is when the owner, okay, so that's the ninth one, when the owner takes or withdraws something for personal use. Okay, so hear me carefully on this transaction. as the owner of a business, right? So let's say I'm running an Indomie business, and then I go and take maybe a piece of the cabbage, carrot, and the Indomie, the raw one, take it home for my children to eat. If that happens, the accountant should acknowledge that the owner has taken something away from the business. The same way we acknowledge when the owner gives something to the business, we should also acknowledge when the owner takes something from the business for personal use. The technical name we give to that is drawings. So professors note it somewhere. Drawings. So drawings refers to all the withdrawals the owner of a business has done from the business for his or her private use. Private use. So for example, if I have a bookshop and I enter the shop, I pick money from the safe, as in how much books have been sold in a day, and I take it home, I give it to my children to use it for their school fees. That is drawings. Because what I've used the money for is not for business purposes, but for my private use. So that's drawings. Please do we acknowledge this concept, drawings? I hope so. So if the owner takes anything for personal use, this is what happens. There is a decrease in assets, right? Because the owner might take money, which is cash, or can withdraw from the bank. Yeah, Portia, I'll come to you, okay, for your question. Or the owner sometimes can even take, imagine if it's a car company, a car merchant. The owner can take one of the cars and use it as his private car. So there's a decrease in asset, which can be in the form of cash or bank or other asset like building or any other thing. Okay, please, I'll come to the questions. The other effect will be decrease in capital as well. Why is the capital decreasing? Because we acknowledge that. Let me give an example to make it more meaningful. Those with questions, I'll come to you, don't worry. I set up an Indomie business with 1,000 Ghana cedis as my capital. If I go to the business and I take 100 cedis for my private use, in reality, what I'm doing is that I've reduced the asset cash of the business. And again, I have reduced how much I gave to the business. That's the capital I gave to the business. So in reality, the 1,000 cedis I invested, since I've taken 100 for my personal use, then I will say I no more have 1,000 cedis invested in the business. I have 900. So that's why we have decrease in capital, and that will come in the form of the drawings I spoke about. Okay, questions, Josephine.
Sir, please, I want to ask, is it a bad thing to take money from the business? Because I know it will reduce the capital and all, but you are the owner. So you actually did the business to help you with your personal uses. So
Okay.
why is it a bad thing?
Okay. So, straightforward answer, it is not bad, but it doesn't also mean that we shouldn't record. Remember, accounting is all about recording all the activities that occur in the business regarding monetary issues, right? So even though you are the owner, if you are taking something away from the business as an accountant, I should record that yes, the owner has taken this amount from the business for his or her private use. So it's not bad to withdraw something from your own business, but it will be bad if we don't record it. Okay, so we need to record it, and that's why we are looking at how you record it. So Josephine, I'm sure you are cool with that. Portia, let me hear.
Yes.
Sir, please, I want to ask a question. If the owner makes a withdrawal from the business, won't it only affect the credit side? That is like the capital. Why will it affect the Yeah.
the asset. Okay, so look at the scenario I gave where I invest 1,000 cedis into a business, right? So the business would have cash of 1,000 cedis as investment from me, the owner, right? Capital. So picture it here. Let me do a demonstration here so that I hate to do this abstract kind of thing. So let me make it more concrete for you. So this is a business, right? And the owner, I am the owner here. Please don't laugh at my structure. So I am the owner and I gave this business 1,000 cedis. So the business is going to acknowledge capital that my owner has given me money. So the business will acknowledge the capital 1,000 and also acknowledge that the capital came in the form of what? Cash or physical cash, right? So these are the two things the business will acknowledge: 1,000 capital and 1,000 cash. And I believe we all agree with this one. So if the owner, I'll come to your question. If the owner is now taking 100 cedis away from the business for his personal use, then this business will say that, oh, owner, the 1,000 you gave me, you have taken what? 100 away, right? So you see that the drawings of 100 will affect the capital. So it will decrease the capital from 1,000 to 900. Okay. And also you took the money cash. So the cash too is no more 1,000. The cash too will also come to where? 900. So Portia, do you acknowledge why it is affecting the assets too and not only the capital?
Okay, say.
Okay.
I acknowledge it.
Yeah. Augustine, Apolli, go ahead. Let me hear you.
So please, all the question I wanted to ask, but she has already asked before they explain it.
Okay. So I hope you appreciate the explanation I've given for the drawing.
Yes, sir.
Okay, good. Thank you, professors. I admire your contributions, questions, and everything. Prof. Eugenia, are you cool? Prof. Oswald, are you cool? And Prof. Zoe. Okay, I think I've heard from Eugenia. Zoe and Oswald. Okay, great. Oswald, great. And then I'm sure Zoe would also follow soon. Okay, so let's continue. So that's when the owner takes something for personal use. We call it drawings. So anytime you see drawings in accounting, you remember that it's the owner taking a resource out of the business for his or her personal use. Okay. The last transaction, but I'll add another one, so I'll make it 11. Sorry for saying 10, but actually I'm going to do 11 or even more. We call that one. So 10, return inwards of goods. Return inwards of goods. Clean this. Return inwards. Now, the 11th one I'm going to add is also the opposite of this guy, return inwards, and that is return outwards. Let me just make it simpler for all of us. Returns has to do with sales and purchases of goods. Note it. Returns has to do with purchases and sale of goods. But then we have two types of returns: return inwards and return outwards. So let me put the return outwards, which will obviously be the number 11. return outwards. Okay. Now, at what point do we say return inwards? Return inwards is the point where the business sells to customers, and then the customers return the goods back to the business. Okay. Let me pick up. Portia, is that a question?
No, say, I wanted to say your line is breaking.
Oh, okay. Is it okay now?
Yes, it can go.
Okay. Great. I think it's okay now. Okay. So I was making a point about returns, right? And I was saying returns has to do with selling of goods or purchase of goods. There are two types of returns: return inwards and return outwards. Now, return inwards simply means that your customers are bringing back goods you sold to them earlier due to some reasons, like maybe the goods are faulty, or there's an expiry date, or maybe you oversupplied them. So for example, if our class is a business and we sell shoes, if we sell the shoes to our customers and the customers return back some of the goods to us, then that is return inwards. Return outwards, this time, is where the business is rather sending back the goods to the supplier. So we can say that return inwards is related to sales, and for that matter, we can also call it sales returns. So return inwards, or we can call it sales returns. So who can guess the name of the return outwards? So it's either return outwards, or I think all my professors should get this one. Return outwards or purchases returns. Purchases returns. So now I want to know how you record these things when they appear in your transaction and the impact they would have on the accounting equation. So let me give a scenario. Let me read something in the chat. Say, please come again. Akole, which point did you miss me so that I can take it again?
So please, the difference between the return inwards and outwards.
Okay. So return inwards are the goods customers, right? So let me indicate here. Yeah, that refers to the goods returned, or let me use brought back to the business by customers. And I've given you reasons why customers may return goods back to the business. If there is an expiry date, or they ask for 10, you supply them 20, they are definitely going to bring back the excess, right? So it refers to goods brought back to the business by customers or returned back to the business by customers. And then return outwards, on the other hand, is the amount of goods the business is sending back, right? So refers to the goods the business returns to its suppliers. So I think you are cool with this two concepts: return inwards and return outwards.
Yes, please.
Okay. So now let's look at the effects each of them is going to have on our. Okay. So this is it. If customers, or normally debtors, right? these returns happen between customers and debtors, or debtors, right? Those who owe us, they normally return goods to us. Okay. So look at the scenario. We are a business. We sell shoes. We sell 200 shoes to our customers. 5 of them return it back to us. So what is going to be the impact? Whoever gets this, I'm sure I can offer you something, some award, be like a toffee, online toffee. Yeah, Portia, go ahead.
Say, so if we return goods inwards, like from outside into the business, one, there will be increase in our assets.
Which asset?
If we stock, maybe if we, there will be maybe no, there will be decrease in our cash, because maybe what if the customer paid for the goods, so person returning the goods back, we have to give him a cash refund.
Okay. Thank you for that. Any other suggestion or contribution? Prof. Zoe, I haven't heard from you today, and I'm dying slowly. Prof. Zoe, let me hear you on this one. If you can even give me one of the effects, I'll be grateful. The customers bring back the goods to the business. Don't worry, you say it and get it wrong. If there is even anything like wrong in my class, there's nothing wrong in my class. Prof. Zoe, Prof. Bridget, would you share an idea on this? And Prof. Austin, I think Prof. Austin, your microphone is, I don't know if you have sorted it out. I would be glad to hear your opinion on this one. Okay. Yeah, Portia, you want to say something? Go. Let me.
Sir, please, I wanted to ask if what I said was correct.
Don't worry, you'll find out very soon. Okay.
Okay, sir.
Yeah, Prof. Bridget and Prof. Zoe, I would be glad to hear from you. Your thoughts on this one. Your customers return goods back to you. I don't know. Is it because you have not eaten this morning? Okay, so when the customers return the goods back to you, remember the business will be getting the goods back into the business. So there will be increase in asset stock, right? And that came in the form of return inwards. Now the other effect will be that, like I indicated to you, mostly it's our debtors who do these returns to us. Because before you pay for goods, you might have done all the checks. So there is no return inwards when you have settled with cash or bank, right? So mostly it happens when the person didn't pay or would pay later. So there's going to be a decrease in that debtor's value because the debtor will no more owe us the initial value we supply. So there will be a decrease in assets, and that's the debtor, right? So just to explain the point, we sold the goods to the person 3,000 Ghana cedis, right? So the person owed us 3,000 Ghana cedis. Now this debtor returns 1,000 Ghana cedis back to us. So we are going to get our stock back. So there's increase in asset stock. Okay. But then the person will not owe us 3,000 because he has returned 1,000 to us. So there will be a decrease in that debtor balance, which is an asset. So that's why we have increase in asset stock and a decrease in asset debtors. Okay, I think there's a question for me there. Let me hear you. Okay. Yeah, Augustine.
Sir,
Yes, go ahead.
sir, I didn't get your explanation.
On the returning was.
Yes, sir.
Okay, so the point I made is that returning was goods that our customers, mainly our debtors, right? This is customers who took the goods and didn't pay, return back to the business. So if the customer is returning the goods back to the business, the stock is going to increase. So look at an example. We sell televisions. We sold 300 televisions out to the customers. And then they return 20. So the business is going to get back 20 televisions. So the asset stock televisions will increase. However, because these customers have returned the goods back to us, how much they owe us is also going to decrease. So the example I gave, if the initial goods we gave them was 3,000 Ghana cedis, and they have returned some back to us, then they will no more owe us 3,000 Ghana cedis. They will owe us lesser. There's going to be a decrease in how much they owe us. That's why we have a decrease in the asset debtors. Okay, does it make sense now? Okay, so Prof. Akoli, that's the reason. Yeah,
Sir, please,
Portia.
no. So don't get it.
Okay, I think more examples would help you, right? So take yourself as a business. You buy and sell shoes, okay? And then you sell shoes to Mr. Amwa.
Yes, sir.
Yeah, you sell shoes to Mr. Amwa and Prof. Bridget, right? Now we didn't pay you, so
Okay,
we become your debtors. We didn't pay you, so 100 cedis, 100 cedis. So altogether we owe you 200.
400 cedis.
Yeah. And then when I wore my shoe, I saw that the size is bigger than my size. So I returned the shoe back to you, Akoli, the business. So you,
Okay, sir.
Akoli, you are going to acknowledge that, okay, you have gotten back a shoe, so your shoe will increase, right?
Yes, sir.
And again, myself and Bridget owed you. But because I have returned my shoe back to you, I don't owe you again because the shoe didn't fit. So I don't owe you, right? So
Yeah.
your debtors balance is going to decrease from 200 cedis to 100 cedis. Do you get it now?
Yes, sir. Yes, sir. Thank you.
Yeah. Okay, Portia, let me hear your question.
Sir, please, I want to say that why would there be decrease in assets? Debtors.
Oh, I think if you listen to the answer I gave to Akoli, then you should be okay. If not, Akoli, please explain to him. Explain to her for me. And I think Austin has a question. Austin, I'll come to your question. Hold on.
Sir, please. Sir, please. What do you say again? Like, what was the question?
Yeah, she wants you to explain why there is a decrease in asset data.
Decrease. Okay. So let's say, for example, Portia is having a business. If she's having a business, then let's say she sells computers. And when she sells the computers, she gave it to, let's say, me and my brother. When she gave it to me and my brother, the laptop was, let's say, 2,000 Ghana cedis, but we didn't pay. That means that we are owing her. We are owing her. We are owing her. So if you are owing her, you become the debtors to her business.
Okay.
But when I found out that the laptop is not working or is not working, I bought the laptop and everything back to the business or back to her. So in that case, she still has a laptop. Like the laptop she has increased because I give her the laptop. And because of that, I also don't owe her again because the laptop, because I've given her the laptop. That the debtors she has also reduced.
Mm-hmm. So for Portia, I don't know if you're okay with that. If not, I'll add more examples. But let me hear Austin. Austin Akoli.
Okay.
Austin, I don't know, but I'm struggling to hear you. It's like your microphone, I can see the icon on the screen. It's not working. I don't know. So please check it again, or better still type, or you can do a voice note on WhatsApp for me. I'll listen and then we'll address your question in the next and last session. Okay. Now, to my other professors who are having network issues, I beg you, you may have to watch the video. Okay, when I share the recordings, I beg you. And then come to my DM if you have questions on some of them. Just send me the question. I would answer you or respond to you. Okay. If we need to schedule another time to have a discussion, I'm ready to do that. So please don't let me leave you out. Watch the video. If you get confused, ask your questions either on your private page or directly to my to me on WhatsApp. I'll address it for you. Okay. I understand the network issues and stuff. Okay. So dear professors, I think when we come back, I'll go over this returning words of goods again and deal with the return outwards as well. So see you in the third and final session. I'm grateful.